All right, I'm here today with Max Smith, CEO of OjO. Now, do you want to just explain to investors on a high level, what is OjO? What are you guys targeting?
Sure. OjO is an electric scooter rideshare company. Company was founded 5 years ago by founders who created, designed, and patented a scooter meant for retail.
Okay.
But in the process of doing that, really built a sustainable scooter.
You stumbled on a new market.
Well, I met the founders a couple of years ago, fell in love with the product, and absolutely hated the business model. And so I said, there's something, I get it, we're pitching green sustainable transportation, but selling a $2,400 electric scooter to only the elite who could afford it. And then when you own it, the ownership model is a little different, and then it, like a car, could spend 95% of its time parked. So it doesn't really speak to sustainability.
No, okay.
And so I said, listen, this is what you need to do with the business. Let's go after sustainability, do rideshare, and that way everyone can use it, and you only pay for it when you need it.
Right.
And so that's the pivot that we've done over the past, since I've been here about a year and a half.
And so, anyone who's even heard of any kind of e-scooter business or Bird, Lime, like multi-billion-dollar valuations, can you talk a little bit about the market size that people are seeing to justify those valuations?
Well, the market size is, people are going into disrupting cars.
Right.
So cars are everywhere. The mobility space is a $7 trillion business, but cars and trucks are about $2 trillion of that. And it's really urban mobility, where 53% of all vehicle trips, car trips in the city are under 3 miles.
Okay.
That's the sweet spot. That's a sweet spot for us. Our average ride is 2 miles, but we have people riding 10 to 15 miles in every city every day. So that actually moves into that ride-hailing space. But micro-mobility, when it started, when Bird sort of started the industry 2 years ago, that was it's half a mile. It's I think their average ride is about 0.6 miles. And so we want to do those trips, sure, but we want to do trips that are much further and longer, and our scooter really enables them to do that.
Right, and so that's a perfect segue. So obviously you guys have a bit of a differentiated product. You talked about the IP that you guys have. Do you want to talk a little bit about to help investors understand exactly what makes your OjO product, why you fell in love with it?
Yeah, sure. It's got a seat. It's fun to ride. It's a safe vehicle. It's a sustainable vehicle. It's going to last years, not months. Right. And so all of those things are critically important. But, making it available to the public for rideshare, it's got to be sustainable. It has to last and has to be safe. So those are all the design elements that it really caught my eye. That this is a vehicle that can stand up to rideshare. It could enable longer rides. It's commuting rides. It's we have a basket on it. You can do chores. You can put things in the basket. And so that's I think that's how it differentiates.
Excellent. And because we were talking about this earlier, some of those safety features as well, whether it's the Bluetooth connection, the larger wheels, that obviously speaks really well to regulators, which is, I think, one of the hurdles that you have to get over as a rideshare company.
Yeah, municipalities want safe, sustainable product. They also want a safe, sustainable product that doesn't come with all the unintended consequences.
Piles of scooters on the
Piles
street
of
corner.
scooters blocking sidewalks, blocking right-of-way.
Or riding on sidewalks.
Or riding on sidewalks, So all of those things. And so we have a vehicle that's designed for something else. It's designed for the bike lane. It goes on the right-hand side of the street or the bike lane when available. And it's also, you wouldn't think of taking, it's such a much larger vehicle that you wouldn't think of taking it onto the sidewalk. And we use our geofencing technology not only to throttle speeds or prevent people from riding in certain restricted areas, but we create environments for virtual parking.
Okay, cool.
So some companies will stencil parking places and say, park here. We do it a little differently, where we tell you where to park, and that you can see that on the app. And through geofencing, you have to park there. And if you don't want to park there, it's okay, but it may cost you $35.
Right. Okay.
So we're toying with when to use sticks, when to use carrots. Sometimes you give people a reward, a discount off the ride for parking in the right place. Other times you heavily penalize them when you really don't want people parking in certain areas. And we find that's really creates a better environment for everyone.
Excellent. And just so people understand, because I know I've obviously looked into it, this isn't just like a little razor scooter, like the shin breaker that you used to maybe ride as a kid. This is more of like a Vespa, right? Like, how do you guys like to describe it in a physical sense?
Yeah, it's a sit-down scooter. It's got motorcycle-grade pneumatic tires, dual suspension, dual disc brakes. Yeah. It's designed for comfort and safety, and so people are comfortable taking it long
and durability as well, right?
Durability, it's going to last years, not months. We model out 2.5 years, and we think it's going to last a lot longer.
And so what are some of the economics? Obviously, I think, personally, I've read Bird's scooters last like 3 months, maybe less. You're talking 2.5 years. Obviously, on a cost basis, that's going to be phenomenal for your economics of these scooters.
Yeah, we think that they'll recoup and return lots of cash in addition to that recoupment of the initial investment. And so we've got it modeled that if we hit all of our numbers, we're really excited about it.
It's about $15 of revenue per day.
15 per day. That's what we've experienced over our period through September. When we look at May through September, those rides change over the winter, and so some things will change. But we've been very pleased with our KPIs and the numbers that we've been getting to date.
Excellent. And maybe let's move right to the most exciting part. While you're here today, you're ringing about the Venture Exchange tomorrow. So do you want to talk a little bit about your decision to RTO, and maybe you see some of the other e-scooter companies staying with VC, and then even more exciting, what are those growth opportunities that you're targeting with that capital?
Yes, so yes, it is a big day, big milestone for us from a capital perspective, and setting ourselves up for additional capital in the future.
Right.
When you're raising money in this space, you're probably always raising capital, and we've partnered with Fiore, who's been a terrific partner for us in sort of getting to this point, and they've really helped us establish an ability for capital that addresses our current needs, but also gives us future capital and a currency.
Currency, right.
Yeah, so a currency is going to be important. The market is very fragmented. Yeah. And I hear from companies all the time about how to collaborate, how to partner, what to do. And we think that we're going to be, as the only single rideshare company that's public, we think we're going to have a lot of
very exciting. Yeah. And so one of the other opportunities that I remember you had mentioned, or you showing in your presentation, had to do with partners with food delivery services. Now, to me, that sounds like maybe an even more exciting opportunity from the economic side of things than even the rideshare, just given how much more control you have over the scooters. So is that something that you guys see as a big driver of growth?
I think food delivery is going to be really big. Yeah. And it's attractive for a lot of reasons. It's not winning RFPs with city municipalities. It's not fleet management. Right. It's not the wear and tear as that you may have in rideshare. Right. It's a pilot that we have going on right now with a food delivery company. They are showing significant savings in the delivery over any other form factor that they've been using, and they also see great retention.
Excellent.
Retention with their delivery people. Right. So we're excited about that. Now that we have our V2 scooter out, our range is 50 miles, and we've got people every day who are driving that distance. The average of the fleet they use is about 35 miles. There are people who have done 60, 65 miles and beyond, so they need a little battery swap at the end of the day to get that late night dinner crowd. Sure. But I think that's a really big growth opportunity.
Excellent. And so just right now though, with the use of proceeds, that's a pilot you said. It sounds like it's going well. Do you want to talk about what the growth is with these use of proceeds specifically? I believe you said like literally 10x, and then what that growth of the scooter business could be with the food share if that went beyond a pilot.
Yeah, so we have a small fleet. We're a small company. We're really now starting to enter our growth phase. So we'll grow 10x between now and probably the end of January to have those deployed from 250 to 2,500. Right. Throughout next year, we have a lot of discussions both domestically and internationally to grow. And so we're not committing to any of those numbers on a go-forward basis. Sure. Nice try. Yeah, thank you. I always have to try. But we have we're in discussions with many cities.
Excellent.
And they all talk to each other too. Yeah. So it's really important for us to make a good impression, to do it right, not do it right now. We didn't go blitzscaling, be in every city, every market, everywhere. We want to do it right, learn from each deployment, and share those opportunities with the next city.
Perfect. And so you said very fast growth. So final question. For investors who are really interested in the story and maybe are investing or want to invest, what are some of the key metrics or milestones that they should be watching out for in the coming quarters to know that you guys are on track with your growth plans?
Sure, you always want to look at how many scooters are deployed. Obviously, that's what growth is.
Yeah.
And then you have to look at key KPIs that we watch are the revenue per day, and then our gross margins. And we partner with bike share companies, and so these are companies that already do fleet balancing, repairs and maintenance, customer support. So we've partnered with a group of people who already know mobility, and we think that gives us really good contribution margins because that expertise is already there.
Exactly. You don't have to start from the ground up.
Yeah. At the end of the day, you've got to recoup, you have to grow, and you have to do it safely and sustainably, and we think we're on a good path for that.
Excellent. Well, best of luck with the coming quarters. Nice.
Great. Thank you.